Hey, what's up, everybody? I got another video today. I was asked a question was, if they're going to start for $150, what is a really good amount to start with? And I'm going to try to break these down into 3 points. We're going to have 1 point is that first is you got to size up the market. Understand how much you can get, and then finally risk to reward. There you go. All right, so I'm going to break this first step right here is how to size up the market. One thing I like to do is one moment, pull up the chart. All right, so one thing I like to do is I have a watch list of all pairs I like to trade. If you have any questions of what pairs to trade, just let me know. So what I like to do on a daily basis, kind of look at which market has the most volatility. Remember, to make money in any market, you need volatility, and I'm gonna show you how I can look through them. So British pound, you can see this pair right here moves 1,000 points, 3,000 points, 27 points, 87, 88, 355, 555, 45, 363, right? Now, just by doing a quick gauge off of this, you can weigh out the pairs you don't want to trade. So you can see right here, this is a low volatility pair, low volatility pair, low volatility pair. I wouldn't want to trade these. I would like to trade something like this. It has 3,000 points, 1,000 points, 500 points. 355 is not bad, but higher the better, because remember, the first step is sizing up the market. The next step is understanding how much you can get. So this is a pretty picture. If you would have caught this perfectly, you would have caught 3,000 points, 1,000 points. These are great. And to make money is going to be based off the multiplier you want to use. So it could be a penny times 3,000, $1 times 3,000, $5 times 3,000. You do the math of how much you ideally would like to make and you will be comfortable with. Okay. Next, I'm going to break down to you is risk to reward. So I'm going to go through you a intraday trade setup of how I would trade it is by looking at the pair that moved 3,000 points is the British pound Australian dollar. So I'm going to blow this up right quick. It's already pre-done. It's just so we can move faster in the video. But what you're going to see here is pre-market, right? So this is the European session. I'm not awake. I'm not up at 4 in the morning, 3 in the morning, 6 in the morning, 5 in the morning. I wake up around 8. All right. So 8 or really 7:30 to 8. That's what time period I'm up. But you can ideally be up right here and draw up your charts. So on this chart, right, looking at what the market has already done, you can draw your uptrending line. Also, we draw our downtrending line. So is the market up? Is it down? Technically both. But here is how we're going to use our eyes to find opportunity in the market. So as this market cracks through our downtrending line here, or sorry, uptrend line, we're preparing for a downtrend. So let's say you idealistically, and this is where I will get in, is this brick right here. So pow, pow, it confirmed this, I would have got in, and let's say you write this all the way down. So yes, this idealistically, it moves 600 points in 40 minutes. All right. So 600 points could be 600 times $1, 600 times a penny, which would be $6. $600 points times $2. That's what $1,200 in about 40 minutes. Question you need to ask yourself: is that good enough money for you? And at the same time, this is how much you have to risk. Well, let me explain this though. Yes, this is idealistically, but let's say you're conservative. You would have put a stop loss right here. You still would make about 300 points. Not bad either. And like I said, just do the math, do the multiplier, and you'll come away of how much idealistically you could possibly make. But honestly, I probably got out around here out of fear. $450 points is still good money. Yeah. And let's talk about the risk. Okay. So the risk is, are you willing to risk 350 points? whatever number you want to use, 300 points, 350 points times a penny, 350 points times $1, $2, whatever. That's your risk, idealistically. That's our range. Me personally, once it breaks this line, I'll probably be out around 150, maybe around 200 points, just because it breaks what I thought it was going to do. And that's how much you have to risk. So you gotta understand how much you're willing to risk and how much you're possibly willing to make. And that's all, again, in about 40 to less than 40 minutes, pretty much. All right, so let me show you another case scenario. And you can do this on your own time to get a feel for like how this market moves and how many points you got ideally make in a range. So here's another one set up. You can do this one right here. So we broke our downtrend right here, right? Okay, cool. Let's say we got in for this trade. I would have got in right here for a buy. And hold on. There you go. For a buy, get in right here. All right, let's ride this wave up. That's 350 points in 6 minutes. Are you good with that money? Yes or no? No. Let it ride all the way up. Idealistically, this move made 900 points in 22 minutes. $900. Like I said again, $900 times 900 points times $1, 900 points times a penny, which is $9. You just do the math again. Now let's say, when did you get out? You can get out right here at a conservative point of 500 points. That's conservative. So it's still pretty much good money. Or you can get out when the market is starting to show you some type of fear, like you're up a good amount of money. It's okay to get out around here. Then when it starts doing this, get out. It's fine. Take your money. Or you could also do this if you're uncertain. Draw another trend line. Right there. So that could be another point for you to get out. It's up to you when you want to get out. But ideally, in this trade right here, you'd be risking about 250 points. And again, it's up to you how much you want to risk. Is a penny, $1, $2 per point? It's up to you. And you can do this all day long. But honestly, that's probably a good enough amount of money if you did the proper sizing. And you want to do it off your account. So I mean, a good rule of thumb is only risk 2% of your account. So if you want to do that, go ahead and go about that. But that's pretty much how you size up the market. That is how you understand how much you can get, and pretty much you can kind of get a feel for your risk reward on each trade. So you can see this market, you're risking maybe about 200 to 500 points per trade, and you're idealistically making anywhere between, I want to say 400 to maybe 1,000 points. So yeah, there you go. So have fun with that. Do this on your off time, and I hope everyone having a great weekend, and I will talk to y'all later. I'm out. Bye.